Welcome back to another video in which we're going to review a credit sale transaction. In this credit sale transaction, we are offering a discount to a customer to incentivize them to make the payment on time. So here we have on March 12th, Medical Waste Services that provides services on account to Grace Hospital for $11,000. The terms are 210 net 30. Grace pays for those services on March 20th. So let's break down the information over here. Medical Waste Services is the provider of the services, so they are the seller. Grace Hospital is purchasing the service, therefore they are the buyer. So we'll do the journal entry in both the buyer and the seller's books for the same transaction. So in the books of the seller, the journal entry on the date of the sale is accounts receivable debit and service revenue credit. They have provided the services, and those services are worth $11,000, and that's what they have billed their client for. The client who's a buyer in their books, they're going to have a corresponding journal entry. The seller made a sale, which obviously means the buyer made a purchase. So for them, this purchase is medical waste expense. Trying to give a most obvious name over here. They purchased a service, and they have an accounts payable in their books. The seller has accounts receivable, which is an asset in their books. They are saying they will receive $11,000. The buyer has accounts payable or liability in their books, and they are saying that they have a legal obligation to make a payment of $11,000 to Medical Waste Services. Now let's look at the terms. 210 net 30. What this means is the seller is telling the buyer, I will give you a 2% discount on the invoice price, that's $11,000, if you pay me within the next 10 days. Otherwise, the full amount has to be paid within 30 days. So 2% discount on $11,000, 10 days. You start counting from the day after the invoice. So here the invoice date is March 12th. So you start counting from March 13th. Count 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. You have 10 days to make that payment. Grace makes the payment on March 20th, which is well within that 10 days. So their journal entry on this date, this is the seller, they are getting the money. Cash is going to be debited. I'm going to leave a line, and then I'm going to write accounts receivable credited. They have paid the amount in full. Okay, they have settled their account in full. They're paying the invoice of $11,000. However, since they made the payment within 10 days, they do not have to pay the full amount. They're going to pay 98%. They're getting a 2% discount. So for the seller, the 2% discount is a sales discount, which effectively is kind of like a loss. So they are willing to sacrifice, and they have in fact sacrificed $220 in order to get this money within 10 days. Obviously, you would have to ask the question, why is the seller so foolish? Why are they willing to give up this $220? The flip side of that argument is, well, they're smart. They got their money within 10 days, and they don't have to worry about any collection issues. And remember, this cash is in their bank, and they can pay their bills now with it. So it's a very smart business decision to offer this discount, the 2% discount. Now, let's look at the books of the buyer. The buyer made the payment. So for them, cash will be credit. They paid. Remember, if the seller received $10,780, the buyer paid that exact same amount, $10,780. Their liability in the books was $11,000. That liability is now taken off the books because they made their payment. Now, they didn't pay the full amount. That $220, which was, as I mentioned, not a loss, but a cost of doing business for the seller. For the buyer, it's a purchase discount. That expense is that much less expensive. So that expense really is only $10,780 because they paid within the 10 days. Now, again, from the buyer's point of view, you could say, why bother paying within 10 days? Why not wait for the full 30 days? Hang on to your cash. Well, the argument is you can pay $220 less. if I'm a good customer and I always make my payment within that 30 days, why not pay it within 10 days and get $220 off? That is a significant savings. Unless I'm very sure I can get a return on my money by investing somewhere in the market, and we all know that's very risky, this is basically an actual cash savings for me. So it's a good idea. So once again, for one party, it's a cost of doing business. For another party, it's a benefit of making the payment early, they pay less. Now, what happens if the payment is made on the 30th, on the 31st? They don't pay within the 10 days, they pay after the 10 days. So instead of this journal entry, okay, so let me highlight this over here and say that this journal entry is not being done. Instead, the check comes in on March 31st. So they're paying within the 30 days, but they're past the 10-day window. I am getting my cash, and the cash I'm getting is the full amount that they owed me. My journal entry is cash debit, accounts receivable credit for $11,000. Once again, what's the corresponding entry in the books of the buyer? In the books of the buyer, again, the journal entry is going to be for the same $11,000. If I received, they paid, it has to be that exact same number. They're taking 11,000 off their books. I'm taking 11,000 off my books. I received cash, they paid cash. So here what we have looked at in this exercise is a sales discount. Sales discount is a contra revenue account. In the income statement, right up on top, we have our sales and revenue numbers less any discount to come up with the net sales number. Purchase discount is a deduction from your purchases. In the next chapter, you will see this in greater detail when we purchase inventory items.